Growth in emerging markets exceeding that of developed economies for some years to come. Equity markets in these economies have reacted accordingly, with the MSCI Emerging Market Index outperforming the overall global index. Now, South Africa has certainly participated in the global upswing, evidenced by a stronger rand and robust performance of the JSE. Paolo Senatore is head of portfolio manager at RMB Private Bank, and he joins us now to unpack the merits. Paolo, thanks so much for joining us this afternoon. Well, first off, at the top, it seems like emerging markets are attracting investor interest more so than developed economies. What's sentiment like at the moment amongst investors looking for a home for their cash?
Well, I think part of the problem is the developed world can't grow that quickly at the moment. It's caught itself in a bit of a debt trap and needs to work its way through the system. So growth there is very mundane. But of course, there is a lot of cheap capital flowing around there, and interest rates in a dollar account going to earn you close to zero. So it's looking for a home. The one side that is growing, and of course China will come up quite strongly there, growing at 10-11% at the moment, is emerging markets. And you have a reasonably good growth story there. And in many of those countries not caught up in a debt issue. China, for example, a surplus, so it has an ability to spend on its economy. South Africa benefiting from that in a number of directions. First being the demand for commodities. South Africa is still seen, although the index changes over time, but it's still a major commodity play, and that is attracting an element of money. The other side, of course, is you have certain sectors which are attractive, like an emerging market, banking industry, which is sound, solid, and so appeals to investors. But in addition to that, it's quite difficult to get exposure to some of these emerging markets, and the South African market provides interestingly, a very efficient and effective exposure. We trade well on currencies. The JSE is a world-class system, so you can get this exposure. And one then might question, we're getting the fund flows, and we've seen a lot of foreign flows into our equity market, yet we're not the strongest growing emerging market, of course.
Yeah. And with that comes the question then, is South Africa a bona fide investment destination at this stage, or are we seeing flows due to the higher interest rate differential that we actually boast at the moment?
I think it's in truth the combination of both. The one side must be the interest rate differential, and you have this huge spread that allows investors to back on the currency. And given that confidence, I then, as an equity investor, an offshore equity investor, will be quite comfortable then to pick up some dividend yield in a high quality South African bank or a mining company, knowing that I'm fairly protected by these guys that are playing the interest rate spread. And so it just exacerbates the issue. Bear in mind, South Africa is still set to grow at a reasonable number, of course, not to the extent that maybe India and China, Brazil are going to be growing. But we have some other structural problems that don't allow us to grow at that pace.
One of the pressure points that springs to mind when you're looking at the macro factors to consider here is the current account deficit. I mean, it's affected our overall credit ratings. Just how much of a weight or a pressure point is it at this stage of the game?
It's going to be a consideration, and it's probably a meaningful consideration. South Africa, in essence, is a little bit in its structure like a Western world economy. We consume quite a lot, we import quite a lot, whereas if you look at some of the developing nations, exporting more, importing less, and getting a strong manufacturing base. So the structure of the South African economy, in essence, needs to change. And there's a lot of drivers behind that, whereby we become greater exporters of product. And I mean, this now is a wide story because it's rand dependent on the one side, and of course it goes right down to a very base level where it goes to education being probably the most important priority that can, this is now of course generations later, deliver the entrepreneurs of the future. And you need employment to get this going.
And all of this unfolding in a context where we do have the government with a strong industrial policy in mind, you know, intent on actually creating these labor intensive jobs and developing industries like the manufacturing one moving forward, and therein lies the opportunity and potential. So I want to go into that very quickly, because here you're looking at unemployment and low productivity levels with a very contrarian view. It's seen as a positive thing in terms of being able to deliver growth moving forward.
It's positive if you can turn those on its head, of course. And when you get to unemployment, you're going to have to really start right at the beginning, and it comes through a very strong education system, because those are the people that you can ultimately employ. I mean, the government needs to, in the country, give priority to that as a starting point. Of course, then one needs to get the environment which is conducive to investment, foreigners, investors, and of course local people investing in South Africa.
Yeah.
Right now, what you see at the moment, because of such a strong rand, is actually starting to see, and this is just evidence from a client base we deal with, is actually clients are quite comfortable to import now and stock up on their stock and so forth, because they think the rand is relatively strong and possibly can't stay there forever. So one needs to change the mindset that it's a very stable mindset country and so forth.
You've said in your research now that the low productivity and the high employment rate could be resolved in a relatively short period of time. Just what are some of the measures that we need to start considering in order to turn this scenario on its head?
We need to get the environment right for productivity, of course. And as I said, there's many drivers in this direction, and you can be very productive, but if the currency is going so aggressively against you, that can destroy that story. But you need to come, and as a country, we need to create, which I think we're starting in the right direction, to create the environment which facilitates investment. And as I say, that is not only an investment in ultimately a company, but in the people that start to come through training and so forth.
Well, Paolo Senatore, we're going to have to leave it there. Thanks so much for joining us this afternoon.